Question number 1. Rock Solid Bank and Trust is the bank that we're working with. They only offer checking accounts. Customers can write checks and use ATM machines. It says that the bank earns revenue by investing the money that's deposited, and currently it averages 5.2% annually on its investments. So this is the way banks make money. They want you to deposit your paycheck and your savings into the bank, and then they'll turn around and loan that money for people who want to buy a car or a mortgage or a personal loan. They'll loan it out at higher percentages. In this case, it's 5.2%, and then they pay their members or their customers a lot lower interest rate than that. So they're paying their checking account holders 0.5% on their deposits, but they're turning around and lending that money at an average of 5.2%. The question tells us that there are operating costs of a bank, and the operating costs are related to using the ATM, visiting the branch, processing the transaction, and managing functions, because there are managers of the money that's deposited into the bank. And then the question furthermore gives us data on customer A and customer B. It says how many times that they've used the A&M, visited the branch, their number of transactions, and their average deposit. And so they want us to compute the bank's operating profits. So this question, it's not a standard question. You just kind of have to read it and figure out what they want. So on our test, we're not going to have anything this abstract or complicated, but you should be able to work a question like this, and you're going to have to use a little bit of common sense, a little bit of accounting knowledge that you've already accumulated to be able to answer a question like this. So operating profit, remember that's going to be your revenues minus expenses, and that's your profit, right? All right, so what do we have to do here? We have to calculate our profit. So to calculate our profit, we have to figure out what our revenue is and what our expenses are, and then we have we can figure out what our operating profit is. So our revenue, the question tells us that the way we make money, the way we make revenue is we invest our deposits into something that gives us 5.2% annually. So all we have to do is we take our total deposits, which the question tells us is 375 million in deposits. Multiply that by 5.2%. And we get, let's see, we get $19,500,000. So that's going to be our revenue. Now we don't get, remember, we're not just making 5.2% on our investment. We also pay out money back to the original depositors. So remember, we're paying out 0.5% interest to our depositors. So that's going to be an expense for the bank. So we multiply by 0.5%. Okay, and don't forget that 0.5, because 5% and 0.5%, as you know, is very different. So we have to make sure that we get the decimal right. But 375 million times 0.5%, That's going to be 1,875,000 in interest that we're spending. And then we have operating costs, and those were given to us. We have the cost for using the ATM, visiting the branch, processing transactions, and managing functions. And the fact pattern tells us that those costs were $15 million. And that's an expense as well. So we have our 19.5 million in revenue. We subtract 1.875 million in expenses, and then another 15 million in expenses, and that gives us our profit of $2,625,000 profit. All right, so for a question like this, this is more of a real-world question where maybe you're an advisor to a bank and they're asking you to calculate profits. They're not going to give you a formula on how to calculate it, but you should use your accounting knowledge to figure it out yourself and to be able to give the correct answer. So for Part A, the operating profit is $2,625,000. Part B says compute the profit from customer A and B, assuming that customer costs are based only on deposits. So that means that even though we have several different kinds of costs here, we're just going to base these costs, we're going to allocate the cost based only on deposits. So we're not going to split it up 4 or 5 different ways. We're going to have just the one, we're going to have our operating costs lumped all into one sum and then split it up according to deposits. So it says here that interest costs are 0.5%. So that's just repeating what it already told us in the fact pattern. And then it says operating costs are 4% of deposits. And we can check that at 4% of deposits. It shows here that 15 million operating cost in the fact pattern, and if we divide that by 375 million, so that should give us 4%. So that equals 4%. So just in case you're wondering where that 4% came from in the fact pattern, that's all I did. 15 million in operating costs divided by 375 million in deposits. So it wants us to calculate the profit per customer. So customer A and customer B. I'll do customer A and I'll let you guys do customer B. So customer A, according to the original fact pattern, it had $6,000 in average deposits. So if we do 6,000 times the 5.2% that remember, the bank is loaning, takes our money that we deposit, and then it turns around and loans it to other people. And it's loaning our $6,000 to other people at a rate of 5.2% on average. So that gives us $312 in revenue. The bank also pays us $6,000, 0.5% in interest. Remember. So 6,000 times 0.5% is going to be $30 in interest expense that we're paying to the depositor. And then we have to record our share of the operating costs. Operating costs as we saw, is 4% of deposits. So if we just take our $6,000 deposits, multiply that by 4%, we're going to get $240. So if we take 312, subtract 30, and subtract 240, we get a total customer profit of $42. That doesn't seem like a lot of money. You know, this customer deposited $6,000 in your bank, and ultimately you only made $42 in profit from that one customer. It doesn't seem like a lot, but you know, if you have thousands and thousands of customers, it can add up to quite a bit of money in the long run. So that's going to be customer A for part B. And then I'll let you guys do customer B. It's just follow the same formula that we used for customer A. All right, part C, it wants us to calculate the profit for customer A and B again, but this time it wants us to assume that customer costs are computed using the ABC method. All right, so number one, for part B, we lumped all of the operating costs together and then just split it by deposit. This time for part C, we're going to try to break it down between the 4 different activities: the ATM use, the branch visits, the process of transactions, and then what was the 4th one? The managing functions. So first we can find out what the cost per use is. So for the ATM, we know that the total cost was $1,005,000, and there were 2 million ATM uses. So that's 75 cents per use. All right, so every time the customer uses the ATM, it costs the bank 75 cents. For branch visits, that cost $900,000. And customers visited a total of 150,000 times, so that comes out to $6 a visit. So, so as you can see, bank visits are very expensive. You have to pay for security in the bank. You have to pay for a teller. You have to pay for quite a lot of things. So so bank visits are very expensive, and that's why banks nowadays have been pushing ATM transactions, because it's so much cheaper. All right, processing transactions. There were it cost $6,600,000, and there were 80 million transactions. So that's going to be 0.0825 per transaction. And then finally we have managing functions. So this one's going to be a percentage. So it cost a total of $6 million to manage 375 million in deposits. So that's going to give us 1.6% cost. So whatever deposits we have, it's 1.6% of that is going to be an expense for managing that money. All right, so again we have 75 cents for the ATM, $6 for a visit, 0.0825 per processing transaction, and 1.6% cost for managing deposits. So now we can calculate our profit for customer A using these new numbers. So for revenue, the revenue is the same as Part B, $312, because you still have $6,000 in deposits and you're still loaning it out for 5.2%. So that's $312. Then we have interest expense that we're paying to the customer. That was 0.5%, and that's also going to be the same amount, $30. Our ATM use, customer A used the ATM 100 times, and as we calculated, that was 0.75 cents per use. So that's going to be $75. Visiting the branches, this guy, customer A, visited the branch 5 times, and it costs $6 every time he visits the branch. So that's going to be $30. The customer also processed 40 transactions, and it's 0.0825 per transaction, so that's going to be $3.30. And then we're going to have the managing of the deposits. So he had $6,000 in deposits, and it was 1.6% cost. So that's going to be $96. All right, so we have our revenue of $312. We subtract 30 for interest expense, 75 for the ATM, 30 for the branch visits, $3.30 for processing, and $96 for managing deposits. So that's going to give us a total profit. The bank is going to have a profit of $77.70. So that's quite different from our first problem. For Part B, where we just did a quick and simple allocation of operating costs, and we got it. We concluded that customer A's profit was $42. But when we split it out into the different cost drivers, we actually see that we made $77.70 from customer A. All right, so now you know how to do the ABC for customer A. So go ahead and try to do it for customer B for Part C of question 1. All right, question number 2. Kinnear Plastics manufactures components for the aircraft and marine industry. That part's irrelevant. It says that Kinnear buys plastic from 2 different vendors. It buys plastic from Japan Corporation and Hill Enterprises. And Kinnear always chooses the vendor based on price. So it looks like he calls up both companies and asks them for their price, and then whoever gives them the lowest price he goes with. Now the problem is that sometimes the plastic isn't good. So looks like it for the past year, Kinnear bought 4,400 tons of plastic from Japan, and 110 tons of that was bad. Hill, on the other hand, sold Kinnear 8,200 tons of plastic, so almost twice as much. But 410 tons was bad. So Hill's stuff, just at glancing at these numbers, Hill's plastic is generally not as good as Japan's plastic. Alright, so now it says that the purchasing manager has received bids on a new order. Japan bid $14.82 and Hill bid $14.63. So Hill is cheaper again per ton, but now we have to figure out if they're really cheaper, because if their plastic is always bad or bad more often, well, it doesn't really help that they're cheaper. If they're going to have to throw away a lot more plastic, it might end up being more expensive in the long run. So part one, so for question 2, the first part, A, says assume that the average quality will continue, and so we have to figure out what the effective cost per ton for Japan and Hill will be. All right, so I'm going to do Japan, and then you can do Hill. The question, or the fact pattern, tells us that for Japan, they're charging $14.82 per ton. So $1,482 for 1 ton. All right. Now it shows us that we purchased 4,400 tons last year from Japan, but 110 were discarded because they weren't good. So 110 tons out of 4,400 tons were discarded, and when you do 110 over 4,400, you get 2.5%, or 0.025. All right, so that means that really you're not paying $14.82 for 1 ton. You're paying $14.82 for 0.975 tons. Okay, so you're not getting 1 whole ton out of this. You're actually only getting 0.975 tons out of this. And where do we get 0.975 from? That's just going to be 1 minus 0.025. Okay, so when we do 1482 over 0.975, we get $1,520 per ton. All right, so again for Japan, even though the list price is $14.82 a ton, it's really effectively $15.20 per ton, because you have 2.5% of your plastic is going to be bad, so you're going to have to buy a little bit more. All right, so that's your answer for Japan for part 1A. I want you to figure out figure out the amount for Hill, and then once you figure out the amount for Hill, compare the two and see which one is cheaper, really. So whichever one is cheaper, that's the one that you're going to go with for part B. All right, so again, figure out the effective ton, the effective cost per ton for Hill, compare the two, and go with the cheaper one for B. Question number 3. In this question, it wants us to prepare a traditional income statement and an activity-based income statement. The company is Tri-State Mill, and the fact pattern gives us the amount of energy used. That it gives us the cost per machine hour, as well as the number of machine hours run. It gives us resources used versus resources supplied. Remember, we talked about that in the PowerPoint. Resources supplied, that's how much you're actually paying for. Resources used, on the other hand, is what you actually used. So ideally, you would like to use everything that you paid for, but practically that's not probably going to happen most of the time. So for part A, it says prepare a traditional income statement. So we start out with sales revenue, and that's given to us. It's $30,000, and then we have to calculate our expenses. We have energy costs. Remember that in a traditional income statement, it doesn't break down what you actually used. It just shows what you paid for. So we paid for $6,900 of energy. The fact pattern tells us under the resources supplied section. We also have repair costs. And that's $12,000. So we add those two up, 6,900 and 12,000, we get 18,900. So then we do our 30,000 sales minus our 18,900 in expenses, and we get 11,100 in operating profit. All right, so that's part 3A. Now for part 3B, we're doing the same thing, except we're doing activity-based statement. So our sales is going to be the same. It's going to be 30,000. But now we're going to have the 3 columns that we looked at in the PowerPoint. We're going to have a resources used column. We're going to have unused, and we're going to have supplied. And those are going to be 3 different columns. So for energy, it tells us that resources used is for energy, it costs 90 cents per machine hour, and there were 6,000 machine hours. So you do 6,000 times 0.90, and you get $5,400. All right, we know that resources supplied, that's going to be the same thing as in the traditional income statement that we just did. So that was 6,900. So the difference here, you just have to do 6,900 minus 5,400. So we know that there were $1,500 that we paid for, but we didn't get any use out of. All right, and then for repairs, it tells us that we paid for $12,000 in repairs. It tells us that it's $16 per job, and that we had 600 jobs. So if we do $16 times 600, we get $9,600. So we used $9,600, but we paid for $12,000, and the difference between those two is $3,900. So then we have our total costs in the 3 columns. We just have to add them up. 54 plus 96, that's going to give us $15,000. 15 plus, let me see. Oh, made a mistake here. All right, for the second column, it's 15 and 24, not 15 and 39. 1,500 plus 2,400 equals $3,900. And then in the final column, 6,900 plus 12,000, that gives us 18,900 in resources supplied. So that's going to be the same amount right here as it was in Part A. And then at the end, we still take our 30,000 in sales minus our 18,900 in costs, and we get the 11,100 in operating profits. So our profits is the same between Part A and B, but Part B, as you can probably tell, is a lot more useful because it breaks down the costs a little bit more, so you can see what you're paying for versus what you actually use, and then attempt to control costs with that information. Question number 4, it gives you a list of, I think, 10 different costs: process inspection, scrap, quality training, and so forth. And then it wants you to categorize each of these costs. So I'm going to let you guys do that on your own. Just look at pages 396 and 397 of your book in Chapter 10 under the section titled "What is the cost of quality?" It lists all of those costs there. So after you review that part of the book, go through question number 4, categorize each of these costs, each of these activities as either prevention, appraisal, internal failure, or external failure. And then after you do that, after you categorize each of these activities, then you add up those costs for March, and then compare each of those to the sales revenue. So, for example, go through each of these categories. Looks like for the prevention category, you're going to have process inspection, quality training, preventive maintenance, and materials inspection. So then you go to the fact pattern, you find out the dollar amount of each of those costs, add them up, and then divide that by $490,000 of sales, and you're going to get a percentage, and that's going to be one of your answers for March in Part B. So again, go through each of these activities, classify them by the category, add it up, and divide it by the sales for the month to get your percentages. And you're going to do that for March and for April.